All right, let's go over the opening range breakout on crude oil. Taylor is in the futures XLT today. Highly recommend go back and take a look at the session that he did. It was very interesting. We're still in it right now. He's wrapping up, but we were talking about this 5-minute chart on crude oil and the opening range breakout. And I asked him in the chat to take a look at this because I felt there was some sort of bear trap down here. It's also G trap. It's over 70%, right? But the G trap is, if you're looking at the G trap is saying like, well, if this comes below here, then you've got a G trap for today. And for this to come all the way back down to here, probably not going to happen, right? So in the context of this, like in the last video, we're talking about reading the context of the trade on multiple time frames. And that's the most difficult thing that you can do. So you should be practicing that every day. The context of this, you're going to have more of a bear trap on your opening range breakout, right? Because look at what we've got here. Let's turn off the G trap. Here's your opening range. This 5-minute chart here, okay, the 5-minute chart, put your trend cloud on. Look at this. It's extended, right? And this is the 1 hour. This is the 1 hour trend cloud on the 5-minute chart. So you can see, let's put it back to the regular, okay? So when the trend on any time frame, if it becomes extended, what does it want to do? It wants to break below that 50 and close below the 50 somewhere. So in the context of this, because on crude oil, the trend is up on the high time frame. 1 hour chart, look at this. 1 hour chart is our trending time frame. So we have to take trades in the direction of our 1 hour trend. On the 4 hour chart, it's also up, right? 4 hour chart is also up, and we are impulsing up on our cycle indicator, and momentum is up. So we have cycling up, momentum up on the 4 hour, and on the 1 hour, the trend is up. This is powerful. This is what we're looking for. This is the information that we need to make a decision about how we're going to make some money today. So look at the 15-minute chart and start looking for your demand zones. And here you go. Look how this pulls back right into that previous day's high into that rally base rally. Does it hit the rally base rally? I don't believe it did. Nope, didn't pull back to the rally base rally. So we'll have to jump down to the 5-minute. What do we have on the 5-minute? Let's see. An extended trend, and Taylor and I were talking about this today in the XLT. Right? We were talking about the trend does look extended, and he was saying it looks extended. This has been, he said, and he's going to watch this video, he said it looks extended. This has been going on for a while now. Let's get a little bit more exact. Let's get a little bit more of a visual representation of that trend cloud. So when you're looking at this without the trend cloud, you could say, oh yeah, it looks as if it's extended. It's been going on for a while. Let's become a little bit more objective whenever we can. Add the trend cloud. Yes, it is extended. Fifth wave pulls back, candles turn ice blue. What does this mean? It means that on this time frame, the pullback that's going to take place here, the pullback most likely will be below the 50. Okay, The trend cloud is the 50 simple and this piece right here, the 15 and the 34. Okay. And if you go into the diagnostics here, you'll see 15 and 34. That makes up your trend cloud. All right. So yes, it's extended. What does that mean? It means it wants to close somewhere below the 50. That gives you an idea of where the demand zone is going to be. And what happens here on the opening range? We're breaking below. We're breaking out to the downside in the opening range on crude oil. However, we're in an uptrend on the 1 hour. We're cycling up on the 4 hour. Momentum is up on the 4 hour. Up, up, up. But we're breaking to the downside. That's what you should be saying. Well, to me, that's why I said, hey, should we be looking for a bear trap on the opening range? Okay, this is exactly why. And what does it do? It pulls down, and let's see if we can find some. It doesn't make it. It doesn't make it down to here. But hey, what does it do? Oh, Mr. Tom Jenkins, right? This is a Tom Jenkins line here. That red line there. Oh, look at that. Pulled back to the previous day's high and previous week's high. Pulled back and hit that area. This is not a level of imbalance. This is a level of support. There's a difference. There's a difference between imbalance and support and resistance. Supply and demand zones are imbalance levels. Support and resistance are stuff like this. They're just odds enhancers, right? But this does not represent an imbalance. Okay, so when you have this that's within a demand zone or supply zone, very powerful. Very powerful. So this pulled back, didn't pull back into any zone, but it did pull back below the 50. So because we have trend cloud, we've got a little bit more information than the next guy, and that's all you need for the edge, right? Mark Douglas says it all the time. What is an edge? An edge is simply information that gives you a little bit more of an edge. You have a little bit more of a higher probability than the next guy, So let's turn this off. Where did it pull back to? Do we see? So Taylor did say you've got to probably drop down to a lower time frame. Let's go to the 3. Maybe there's something on the 3 minute. Let's see. Is there something on the 3 minute? No, not really. Let's go to the 1. The 1 minute. Oh, wait. No, it's not still. So, I never do that. Taylor likes to go to the 1, 3s. I don't go below the 5. It's just too fast for me. He's got more experience than I do. It goes too fast. So, but guys, look, it did what we said it was going to do. Understanding the context of the trade is so important. You'll amaze your friends with it. I mean, you'll tell your friends about this and they'll be like, holy cow, how did you predict that? Well, we just read the price action. So with our strategy, because we understand this strategy and we know that if a breakdown happens on the opening range breakout and it's in the opposite direction of trend and momentum on the higher time frames, well, that is peculiar. That is strange to us, So we usually look for some sort of bear trap, and that's why I suggested it today in the XLT. And look what it did. It came down. So it pulled back, hit that previous day's high, and rallied off of it. Now at this point, put trend cloud back on, gives us a signal. It gives us a signal. I guarantee you that on the 1 hour chart, this pulled back into the CCI indicator, to that blue box. There you go. Wow, look at that. Look at the pullback here on the CCI indicator. Is this the 1 hour? Yep. Look at the 1 hour CCI indicator and the 5-minute chart here. Look at how this break below the 50 as it's recalculating, breaks below the 50, doesn't hit a demand zone, unfortunately. But we get this signal. We know that this is a bear trap because of the information that we put together from the higher time frames. We know this is some kind of bear trap. We get a signal. We get a signal on the trend cloud. It pulls back. Look where it pulls back to. Hits that 1 hour trend cloud right at the top of the cloud. Hits it, bounces off. It's in the context of the trend cycling up, impulsing up on the higher time frame. Momentum is up on the higher time frame. Trend, cycle, momentum, green, 4 hour chart. Trend, green, pulls back, doesn't even hit the blue box, guys. This thing pulled back above the positive 100 mark on that CCI indicator. And then look, boom. So what's happening here right now on the 5-minute chart? We broke to the upside now. We have pulled back into the opening range, and now it's taking off again. What did we pull back into? Oh, looky here. Rally base rally. Rally base rally. So, that's the story. Reading the context of this. So, what do we do here now? Let's get rid of this. Bye-bye. What do we do here now? Can we have taken this? Yep, we sure could. Here, buy one. About $250. There's your approximately 2 to 1. Okay. So that is the trade. That is the trade right there. I'll leave that up there. If I wasn't making videos and editing stuff and talking to people. See, it's very difficult to trade and to do this at the same time. I still am not capable of doing that. But let's see. Well, let's see if we can get this to work here. Pulling back on that opening range. Let me go over to Ninja Trader here. Getting that second chance on Ninja. Cycling up, pulling back. 5-minute chart. Yeah. That's a good trade. That's a good trade right there. If you want, jump onto the micro. You can jump onto the micro and take that. What's that? 78.10. Right there. 78.10 right there. Okay, take a look here. Micro. Here's the micro. Crude oil. This is the 5-minute. This is the 15-minute. Here's the 1 hour. Here's the 4 hour. We already know the situation there. Let's focus in on this. Let me show you what I've got here. Fibonacci retracement. 382 is running right through the cloud. I'm going to take my trade right there at that 382. And we're going to buy, buy 3. supply zone. We're going to put below the opening range. Right, we're going to put it below, put it right below the 50. Right below the 50. We've got the 50. We've got the bottom part of the opening range and this little bit of structure here. Okay, about $100 risk. Oops, and take profit at your 2 to 1. Pull back into the cloud. What's it looking like as far as the context? Why are we confident about this? Look at the CCI indicator. So this is going to be, I have this set up on NinjaTrader as well. Here you go. Set it up on NinjaTrader. I am doing what I'm telling everyone to do, okay? I do what I do. I don't know what that means. Okay, so we're just going to wait and we're going to see how this works out. Okay, pulling back into the trend cloud. Rally base rally here. This rally base rally, broke structure here. It broke structure on a formation that also broke structure. This leg broke through this, broke through all of this, and then ripped up and broke through that formation. That's what we want to see. It's pulling back into very strong upward movement here. CCI indicator is saying, hey, if you want to take this level anywhere in the cloud or above the 50, you can do it because look how strong we are, right? So we're just going to see. We're going to see if this works. We're testing our theory here. Okay, we might have missed this because it did come down and hit that already. Okay, we were a little late in our analysis on this. Hopefully that you're in this already. Hopefully you're in this already, and I want this to rip to the upside for you. If this does come back, it means, we really hit it already, guys. Right? We really hit this already. Right? We really hit that already. So if it does come back, maybe it comes back a little bit deeper. That's why I went for this 382. Maybe it wants to hit the 5. You'll never know. You'll never know. Hopefully this thing, you guys are in this, and this thing is going to, rip and hit that 2 to 1 for you. Okay. It looks like it wants to, it does. It looks like it wants to break out of that. It does look like it wants to break out of that. So we really should be in this already. If this breaks out and hits that 2 to 1, I'm canceling on my NinjaTrader. Yeah. There you go. Beautiful. We were a little late. I'm going to cancel that. Okay. I'm going to cancel that on my NinjaTrader. Late to the party. I'm not going to see. That's the type of self-control you have to have. That's the type of self-control you have to have. I'll leave it in the simulator and let's just see what happens. But we should already be in this trade, guys. Okay. So that's a lesson in itself. Don't convince yourself that, oh, yeah, it hit my target. Everything worked. Let's see if it does it again. Not a good idea. Not a good idea. Okay, so this is a lesson in reading the context of the trade, and it's also a lesson in self-control. You are in control of, let me bring the camera back up here because I gotta look you guys in the eyes here and tell you about this. There we go. You guys are in control of every move that you make. You're in control of every move that you make. This is your money. This is real live money. Look at this. We predicted this, guys. We said this was going to happen, and it did. Okay? Reading the context of the trade, we're making money. We're making money because we understand what we're looking at. And if you use these tools, trend cloud, understanding the context of the trade. Again, I was talking about this with Taylor today in the futures XLT. And we, the discussion that was going on was, hey, super strong uptrend on our 1 hour chart, strong uptrend on the 4 hour and the daily, breaking out to the downside on the opening range. I bet we're looking for some kind of bear trap. And that's exactly what went on here. So we were late to the game here, but we had enough self-control to say, okay, we were right. Pat yourself on the back and go for it the next time. I hope you guys are involved with this. If you are, drop a comment below. Let me know that you took some profits here. So beautiful move. Let's see here. Go back to the full contract. So on the full contract, you're already up over $500 on the full contract. And it was about a $230 risk. There's your 2.35% there. 2 to 1 hit. Okay, so great session here, guys. Great session. So again, you're in control of everything that you do. And if you over leverage yourself and it fails, you're going to rip your insides apart, man. Let me tell you, you're going to mess yourself up in the brain. You're going to mess yourself up here, and you're going to feel like, oh my God, I'm such a loser. Okay. The more self-control you have, and I heard this great saying the other day, and it's from the Daily Stoic, and I highly recommend you watch this guy on YouTube. He studies Stoic philosophers, and there's this philosopher, Seneca, and Seneca said, we treat the body rigorously so that it does not become disobedient to the mind. I thought that was great. And that's where you should incorporate your physical conditioning, get to the gym. If you say you're going to go to the gym, go to the gym. We do hard things. We do hard things so that when we're faced with this situation, we have enough discipline to cancel the trade live and not hope, oh, it'll come back and maybe I'll get a second chance. No, sorry, pal. No, this is done. Okay. That we were talking and having a discussion. And so we missed this, but what a great lesson. What a great lesson. So rally-based rally pulled back into that opening range, CCI indicator. Okay. CCI indicator right there was saying, hey, this is safe to take because the pullback is not even anywhere near that 100 line. Okay, we're actually in the two. We're taking the pullback on a CCI indicator of over 200. Wow. That is a great zone to take. And look at that, guys. Rip. We are making money. Okay. Almost at 3 to 1. Almost at 3 to 1 here. Beautiful. Beautiful job. Put the camera back on. So beautiful job, right, guys? So using Trend Cloud, using the strategies that we put together, and reading the context of the trade on multiple time frames. If you can understand clearly and verbalize it and maybe teach it to someone, when you can do that, oh man, you're going to be making money because You're going to understand the context of the trade on multiple time frames and what that means. What does that mean? The context of the trade on the 4-hour chart, the context of the trade on the 1-hour chart, and how that relates to the movement of where this thing is going to go. That's how you make money, okay? So if you're reading this, if you're reading the charts like that, verbalize it to yourself every day, and you're just going to get better. You're not going to get worse, right? There's no way you're going to get worse by practicing this stuff. You're only going to get better, all right? So have a great day, guys. I will see you in the next video.